Welcome to my channel. I'm the cover call guy. My goal is to hit $120,000 per year in passive income using only cover call ETFs. Currently, my portfolio yield $70,000 out of the 120, and I have about just $6,000 a month out of the goal of 10,000. Before we get started, legal disclaimer. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risk, including loss of principal. Always do your own research and consult a licensed professional before making financial decisions. I'm just some random idiot you found online, and I could be completely wrong. With that out the way, today's video is going to be a fun one. It is about day trading. For those who actively trade every single day, this video is about them, not the one that just day trade like once every 3-4 months, get a big win and think they're a big shot, right? I'm talking about active traders that do it on a consistent basis. This video is actually inspired by a friend, because I have a friend that consistently day trades and consistently lose money. So if that friend ever watches this video, I hope I'm sorry. you were the inspiration for this this idea to make this video. Anyways, let's get started on why day trading is basically a sure way to lose money. Right, the hard truth about trading, why most traders lose money. Right, the overwhelming odds from a study: 97% of active day traders lose money. The stark reality is that trading is sold as a path to freedom, but the data shows and tells a different story. Hard studies show again and again that most retail traders fail to make money over the long term. Right? You guys always see the success stories on Reddit or on these YouTubers, but you don't really know what's going on. Right? I mean, unless you have a YouTuber that goes live every single day and you see them consistently make money every single day, those are pretty much the anomalies. Because I'll go on the next slide and tell you why, but you're almost never going to replicate that no matter what. You can follow trades and they'll win and you might lose. The success behind that is like you're pretty much gambling your money. You're just throwing your money away. There's very few people that are actively making money and keeping it. Right, long-term success rate, a 5-year chart or 5-year progress. 99% fail long-term. Only about 1% succeed long-term. Right, short-term wins can happen, but staying profitable for over 5 years is almost impossible. Right, that's key here. Is you can win short term. That's if you call it quits and you like, you know what, I got my money, I'm getting out, I'm gonna actually invest the money or build a business or something. Right, then you've won. You count as that success. But in terms of actually staying profitable for 5+ years and doing this long term and doing this as a job, day trading, you're guaranteed to fail. Right, 99%. You're 99% guaranteed to fail. Only that 1%, based on stats, you're going to lose. It's not made for you to win. Right, it's essentially gambling. Almost everyone quit. 40% of traders stop in the first month. 80% are gone after 3 years. So think about it. Look at that. New traders, 100% of them always almost quit. 40% quit after the first month. 87% are gone after 3 years. And those who stay are probably just hemorrhaging money, or those who stay are actually working for big hedge fund. Right, the 13% are probably traders for hedge funds. That's who you're competing against. Right, the economic verdict, right, from a study from Barber and Odin: trading is hazardous to your wealth. Right, you see you see the meme about the 25-year-old trader, but he's like 80 years old, right? It's killing his health and wealth. 20% of traders who traded the most did the worst. They lost 6.5% more than the market average every year, right? And looking at a clear lack of skill, on average, the stocks that investor bought went on to do worse than the stock they sold. It is a global phenomenon. This is based on a Brazilian study that I found. 97% of traders who kept at it 300 plus days lost money. And that comes to a chilling conclusion that only 1.1% earned more than minimum wage. Minimum wage. You might as well just flip the burgers at Wendy's and McDonald's. The researchers decided it is almost impossible for people to day trade for a living. But people still try and do it. The internal enemy, right? Your brain is literally wired to lose, right? Behavioral biases, overconfidence, thinking you're smarter than you are. This leads to taking huge risks and making oversized bet. And then loss aversion. The pain of losing is 2 times as powerful as winning. This causes traders to hold onto losing positions for too long, hoping they'll come back. Right, the number one wealth killer, disposition effect, holding losers for too long to avoid the pain of taking a loss. Traders let small losses grow into huge, life-changing ones. Selling winners too early, afraid a profit will fade away. Traders sell their best trades way too early, locking in tiny, meaningless gains. Behavioral biases, FOMO, right? Fear of missing out. Chasing a stock that's already shooting up. You buy at the very top right before it falls and lose money right away. And then revenge trading, right? After a big loss, jumping right back into it to make money back. This makes the first loss even bigger. And then the missing bias, right? Panic selling. It's all collapsing. Get me out at any price. This is where loss of aversion leads. The pain gets so bad that trader gives up. They sell the things that look the darkest at absolute bottom, locking in the biggest loss possible. And then there's the psychology doom loop, right? 1 is overconfidence. You make a bad trade, a rush trade. And then 2, loss aversion. You hold on to that losing trade. And then 3, you panic sell. You sell at the bottom, which leads to 4, revenge trade, desperately trying to make it back. And then boom, your count hits 0, right? You repeat until the count is 0, and you keep this whole cycle up, the doom loop. The external enemy. The game is rigged against you, right? It's a negative sum game. Negative sum game meaning it's pretty much like poker. The house always wins. For every winner, there's an equal and opposite loser. Money just moves between players. Negative sum game. Trading, right? This is a casino. The house, which is the brokers and exchange, is always taking a cost, which is a rake from the pot. Losers lose more than winners win. The house edge, death by 1,000 cuts, and that just means that 1, you place a trade, your order is sent to the market. 2, the bid ask spread, you instantly lose money on the spread. 3, cost and slippage, you pay fees and a slightly worse price. 4, reduced results, you beat all these costs just to break even. And then you're just coping with life, which is literally like supercomputers. You're betting, you're day trading against like algorithms, supercomputers with AI trading. Actual thing, by the way, AI trading. With these supercomputers and these hedge funds. You are fighting computers in the same room as the exchange. They trade in the millionth of a second. Info asymmetry. Big firm use PhDs and satellite data. You use gut feeling and public news, and you're already far behind. Payment for order flow. Zero commission isn't free. I bet you guys didn't know that. Like Robinhood and all these other brokerage. Your broker sells your orders to fast trading firms who then trade against you. Trading too often, right? Piling up the costs. As you can see, losing traders place 4 times as much as many trades. This pile up costs from spread fees and emotional errors. The blueprint for ruins, how traders actively blow up their damn account. Common strategic pitfalls. You just get in because you see other people doing it. You see other YouTubers doing it. You see on X about people posting their freaking wins. You don't even know if it's Photoshop, right? It could be all fake, right? You have no. Then you go in with no plan, trading without clear rules for when to buy, sell, and how much to risk. This is just straight up gambling. You might as well just gamble at that point. Bad risk control, not using stop losses, risking way too much, like 10 to 20% on a single trade. And then you over leverage, right? Use borrowed money margin to trade too big. This makes gains and losses much bigger. And then we have the kill shot, which is the margin call. If you guys are that risky to use margin, right? The margin call, using borrowed money, leverage, making losses huge. A 10% drop can wipe out 100% of your money. And again, I have a friend that day trades that does use leverage and margin. And he has been liquidated many times, which leads me to forced liquidation. You can't pay the margin call. Your brokers forces you to sell at the bottom, locking in the worst possible loss. The math of survival, the 1% rule. Amateurs, right, risk 10% of the money on one trade. A streak of 10 losses blow up the entire account. Versus a professional who's been doing this, who knows what they're doing, or the AI computer or the hedge fund. Like they're the professionals, right? They risk 1% of their money on one trade, need 100 losses in a row to blow up the account. They know how to survive. Is trading just an expensive lottery ticket, right? Yes, it basically is, right? Trading success is just about 1% or less. Odds of new traders staying profitable for over 5 years. 5 years. You might as well just play the lottery ticket for 5 goddamn years. Every single day if you're just going to do that, right? The Powerball jackpot is like 1 in 300 million odds of winning the grand prize with a single ticket. You might as well try that odd. You probably have a better odd of winning the Powerball. Second place, maybe not even a jackpot, right? If you're gonna be trading every single day for over 5 years, just to be having a chance of maybe 1% of making it, you might as well trade. Is that financial advice? I don't even know. You might as well not trade. You might as well buy lottery tickets and play the lottery at that point. Case studies and collapse. This applies to everyone. When geniuses fail, right? LTCM, which just means long-term capital management, a hedge fund run by famed traders and 2 Nobel Prize winners. They thought their math Nobel models were risk-free. And then the failure, used 200 to 1 borrowed money. A surprise event like Russia failed to pay its debt, caused 4.6 billion in losses, forcing a government bailout. And that happened in 1998. And then we have the modern Archegos in 2021. Bill Hong, I think he was a fraud, right? But anyways, I think he was the one that also sponsored the movie The Wolf of Wall Street. I think it was him. Not sure. Anyways, this was also a huge scandal. This he was basically a guy, a private hedge fund named Bill Hwang. He used complex swaps, which is a type of loan, to build up a $160 billion position, and then a small stock dip caused the margin call from all brokers at once. His 36 billion fortune was gone in 2 days. 2 days, 36 billion. The retail parable, it's the lost porn, right? You see that on Reddit all the time. People just see people actually post this stuff and show you how much they lose, like $1 million, $2 million, $3 million, $4 million, $5 million. I think at some point I seen on Reddit that the lost porn, people lost like $20-25 million, right? And that happens when I just found some of the comments, and I just copied and pasted, and it just said I dumped my savings into GME, paid my rent, my credit card. Right? And then the YOLO, the diamond hands culture, is all about rejecting risk control. Lost Porn is posting screenshots of empty accounts and is a clear result of this gambling. The 1% anomaly. Jesus. How does anyone actually win? Right, the 1% mindset. Mastering yourself, right? Thinking probabilities, act like a casino, not a fortune teller. You don't predict the future. You just use a winning edge over 1,000 trades. You have to truly accept risks. Losses are a cost of doing business, not a personal failure. This stops fear and revenge trading. And be a risk manager, right? When you're day trading, you're your own risk manager. Ask, how much can I lose, not how much can I make. Protecting your money is job number one. The viable alternative, change the game, right? Short-term trading, a negative sum game. Your goal is to beat the market. Your timeline is minutes or days. Your opponent is a supercomputer, so I don't even know how you're going to beat that. Long-term investing, a positive sum game. Your goal is to beat the market. Your timeline is decades. Your opponent is your own impatience, right? Your own worst enemy is you. The Boglehead philosophy, for those that don't know, Boglehead is actually a very big community on Reddit. For those new to investing, I would go ahead and check out the community, learn from it. Perhaps it fits your ideology better, your philosophy. Anyways, their main core philosophy is the winning move is not to play. 95% of professionals fail to beat the market. You won't either. Buy the entire haystack. Use low-cost, simple market funds or index funds to get the market's average return. And then there's the best fix. This strategy fixes high costs, stop FOMO and panic, and makes supercomputers meaningless. And what's my verdict? Right, the cover calls verdict. You are wired to lose. You're playing a game that is rigged against you, and you're using strategies that ensure you fail, right? The only winning move is not to play. Stop gambling and start investing. Please, guys. Day trading will not get you there. It won't. There's very few. I mean, of course, there's people that's gonna comment and disagree, and maybe they've done it successfully. I would really love for you to go ahead and make a video on that, because then I learned a thing or two, and I don't think I've met anyone that has successfully day trade consistently on a yearly basis and actually have positive returns. I'm not talking about people who trade like once every other month or so. I'm talking about actually day trading 5 days a week or whenever the market's open, like active traders. Well, anyways, that was it. Subscribe, comment, and like, please. And again, please never day trade. And if you do and you win, remember, the first one is always free. Thanks for watching, guys. Stay tuned. Catch you on the next.